Monday, November 28th. Market analysis, Dan Ehrlich. Sorry it's so late this afternoon, or rather, yes, that's right, 12:45 California time. But I had technical problems most of the morning, unfortunately. Hey, back in the groove. We gapped down in the S&P 500 this morning, my favorite index. I usually start with the spiders. Today's recording is going to be a little on the short side because of the problems I've had today. So gaps are usually closed. I've said that innumerable times in the last several months. I guess I've been recording 3 months now. So I expect a rally back up to close the gap that we had this morning between today's high and Friday's low. I know Friday was a slow day because it was after a holiday, blah, blah, but it still exists. Not only that, Wednesday, Thursday was Thanksgiving, and Friday had the same highs, including the fact that they were about the same price as the highs made a couple of weeks ago. You see my screen. So on the 15th of November, we have the same prices, give or take a very small amount, higher the last couple of days of last week. And this morning it moves down away from that little double top over a week and a half resistance area quickly today. Now, when you take a look at where those prices are, it's at the beginning of an old gap closure way back. It happened in 9/12 to 9/13. So a week and a half ago, you bump against the bottom of that area, and then you do it again twice last week. Significant resistance, but gaps are usually closed, not always. Let's see what happens here. This is a double top short term at resistance, the bottom of an old gap, and now it's moving away very quickly. In fact, left a gap behind today. We're between a rock and a hard spot at the moment. If you start closing below 394.20 approximately, you're going to make a new low close for 2 weeks plus. If you close below the lowest low during that time frame, which would be 89.90-ish, 389.90, now you've got a new low close as well as new lows, and you're chewing into support area that already has one attempt to go below it, and it bounced off of it instead. So good support. Let's see if it holds at 389-ish, 390. And there's a gap to close above, plus good resistance at 402.91, ladies and gentlemen, was the high of the rally when I was with family last week, Thanksgiving week. My forecast was between 403, I missed it by 900ths, to up to 408.5. I had lowered my 410 down to 408.5 for a few days ago, a week and a half, something like that. Anyway, which way is it going to break out? If you break out to the upside, you're also in danger of blowing through the only bear trend line we've got for the whole bear market. That changes things, or starts to. And that's very significant resistance, to say the least. That goes back, I believe, to January 4th. It was the exact high day, correct, this year. And it has 3 points on it already, not just 2. So that line is proven to be pretty significant, and it's in a resistance area, and it's the top of a gap closure area, all in one nice, neat little small price range at this point in time. Because as time passes, which it will, that trend line, which is not horizontal, will change price, and it comes down and down, of course. So that will matter in time. But right now, they add up. It was kind of like, I think, the high that we had back in August. Yeah, that was easy to call in terms of a variety of other features. Okay, so I can't get bullish or bearish from this point until I start to see a breakout. What's the trend? Trend's up. But we also have the possibility of an upward slanting wedge or pennant. Both trend lines, the one at the tops and bottoms, both slant upwards, but they're not parallel, so they come to a tip sooner or later. That's not closing real fast, but that's still a pennant. Upward slanting wedge, same thing, basically. And those are usually bearish in the end. They'll break out below the bull trend line across the bottom. So, kind of a quandrum here. I'm waiting to see what happens. Oh, and one last thing. I just realized this. You can't rule out the possibility of, let's see, this was the middle of June, July, August, September, October, middle of October, June, July, August, 4 months from October, middle of October, November, December, February, the middle of February. Wow, that's what I was saying before. We could have the bottom of this bear market, but it may not be a lower low for the whole trend since October 13th. What happens if it does hold in these variety of support areas, and let's say this middle 70s or middle lower 70s, in fact, or even upper 60s, you might have a last shoulder low, middle of February. Very interesting. That obviously means we can't come down super fast. Okay, changing to the DIA for just a minute. Overbought, not quite any bearish signal, but overbought condition for 3 days in a row. An indication it's about to have a retracement, which fine, on the 4th day today it did. It's a new low for 3 days, but it has a ways to go to make a new low for the last 2 weeks, give or take, and bounce back into significant support. I might add that the low last week was almost exactly the same, high that we had last Friday is almost the exact same high that we had back on June 16th. They're very, very close in price. In fact, this high last week made a higher high and couldn't hold it and started to close back down. And then today's the cincher. New lows for 3 previous trading days, which is essentially all of last week almost. Okay, but it's no major amount of damage yet. I need to see lows lower than 32.68, that yellow line. That closing price would start to do some damage, and it might be the last one of the 3 indexes. Look where the SQQQ is. The QQQ is already pretty damn close to the previous low for the break, which was a test of a previous low a few days earlier, in fact. Now here it comes the 3rd time, maybe, and it's getting down to 80.20-ish, 280.20. We're 82.50 right now. That's support, and except if it doesn't hold, and there's a gap to close its lower levels on that as well. Wow, that's too close in time to make a last shoulder. That's not going to work. Maybe double bottom or something else. Okay. The first thing to do is watch the Qs real quick on the daily basis to see if it breaks the lows for the last 2 weeks. Then if that happens and stays there or keeps going the same day, the S&P will follow, and then finally the DIA will do the same thing. The 2000, the Russell 2000, I don't comment about it all that often. It looks a lot closer to what the Qs are doing. It's already made lower lows. In fact, if it closes right here, it's a new low close for the last 2 weeks, but not a lower low yet. So, but hey, that's still damage of sorts. The Qs would be the second lowest close. So basically, this is heading down kind of faster on the Russell 2000. Let's go to forex for a minute. Support bounced off of last week on the euro pound. Let's go to the top of the list first. DX. We caught the top of the market. That was on September 28th. Bearish ER signal. Bearish engulfing, overbought conditions, custom RSI, custom bearish engulfing, as a matter of fact, as well. So we tested the lowest low today with an outside up day, but it's not oversold, not far from it, in fact. This could be a minor bottom short term, double bottom. I would consider doing something on the friendly side of this market at the moment. A little surprised. I hadn't looked at that before this morning. Okay, and the yen, we caught the top of the market. It doesn't have an outside day. It did hold support, also showing signs of trying to turn. That is interesting. Aussie dollar topping out, the reverse, of course, because the USD is on the other side of the symbol, or currency pair, they call them. Topping. Okay, slightly bearish. USD CAD Canadian should be friendly. We got a buy signal, not on the bottom, but just after. That's working. This is a new high and a new high close if it stays here. Since, nice. And the stop was never challenged or hit. Okay, good. US CHF Swiss franc, no signals per se, but it got oversold, turned around. Same support area. Oh, these things are turning. Euro, pound, 3 times now, triple support. Very, very interesting. Okay, resize. Whoop, I didn't mean to do that. That's the whole damn program. And sector symbols real fast. I know that these have got some new ones. I did look through this list. So the first one, I'm going to start at the bottom here of IYE, which is the energy. This is a possible head and shoulder top and an overbought condition of the first shoulder high. The neckline is downward slanted slightly, but not too badly whatsoever. We gapped down today. So if we start to break below 46.70 in the next few days, 46.50-ish, we can have an intact head and shoulder, unless there's a rally that makes it higher than last week's high. Next, XLV, the S&P healthcare sector, has a brand new sell signal today. This is overbought. We have an outside down day. This is a new sell signal if it stays here, and I think it may have closed already. It is almost exactly 1 o'clock. We are currently down 630 on the spider at the moment, almost on the close. And we'll go back to that chart in just a second. But that's a sell signal in that sector. XLP, brand new sell signal today as well. XLB as in boy. OIH, caught the top of the rally. GDX, first high of the double top, bearish engulfing, ER sell signal. And almost a new low close since, except that it made a higher high last week, which kind of kills everything. Sorry. That did offer some profitable potential for approximately 3 or 4 days, which should have, would have, could have allowed plenty of time for a profit. And then it made new highs for the move, but it's a double top at the moment. XOP caught the top of the rally a couple of weeks ago, and it's now a new low close to the move down. XLI, caught a rally high 2 weeks ago. XLF, nothing significant here unless you go back 3 weeks, and that was only 1 day's worth, so that didn't look all that great. XLY got the bottom of the market a couple of months ago, October 13th, that looks like it might be. It is, okay. And XLU, oversold conditions, but not a signal per se, and that's October 13th, I'm almost positive. XLK, only 2 more to go real quick. Caught the bottom of the market exactly the low, October 13th. SMH, same thing. And KBE, late September, first of a double bottom, and caught a nice buying opportunity. The damn thing gapped up a lot the next day, though. That's nice. Thank you very much. This is it, Stan Ehrlich, Monday the 28th. I'll be including commodities and some other things tomorrow. Thank you very much. I'm back on board. Bye-bye.